Hey, thanks for joining us, everybody. My name's Trevor Hall. I'm with Clear Creek Digital and also the host of Mining Stock Daily. And once again, joined with the CEO technician, Mr. Robert Sinn. And we're introducing a company today called Canadian Palladium. Just happens to be Palladium's up another $100 this morning, pushing above the $2,600 spot level price. Canadian Palladium's got an interesting project called the East Bull Palladium Project in Ontario, which happens to be just 90 kilometers west of Sudbury. The company trades on the CSC with the symbol BULL. It also has an OTC ticker with DCNNF. And today, Mr. Gary Clark, the Vice President of Exploration, is joining us. And I know, Rob, you know this project fairly well and have some follow-up questions for Gary as far as some of the drilling that's coming down the pipeline, if it hasn't been finished already. But I would like to note that this project already has a 43101 compliant resource on it. So, Rob, why don't you give us a little bit of rundown of what really interests you with this project right now?
Well, yeah, I'm going to call the company Bull because that's their stock symbol on the CSE. So Bull has this project with about a 500,000 ounce resource already, 8 different types of metals, including rhodium and platinum, copper even. And it's actually a really simple story. So they're doing a 10,000 meter program right now that started last week. And they're going to drill for the next couple of months straight through 30 to 40 holes. And the idea is to expand this resource from 523 ounces PD equivalent to 1 million plus. Talk to the CEO, he might throw out the 2 million ounce number, but let's be a little on the safe side and let's say they might be able to double it, expand the strike length from about 1,800 meters to maybe 2,500 to 3,000, and maybe expand the resource down dip at depth. The historical drilling at East Bull only went down to about 120 meters. So this thing could be open to 200, 250, 300 meters depth. So this is one of the most aggressive programs out there in the junior mining sector right now, and the company's name kind of says it all. So it's an exciting time for Bull.
And Gary, welcome. Thanks for joining us. Welcome to this little presentation. Before we let you kind of get started and walking us through some of the images you wanted to share, I mean, let us know what some of the key takeaways people watching you want them to take from the next few minutes.
Well, the main thing is that the zone itself, as was mentioned, has been tested, but not for the full length, and it's wide open at depth. It's got a very favorable dip. It dips 45 degrees to the north, which therefore, at a stripping ratio to get into it as a pit, it'd be pretty easy to get into as a pit. The zone goes from anywhere from 2 to 20 meters wide, depending on the section of it, and there's lots of gaps. The drilling is fairly wide spaced, and we lined this one up just because of the location and also because of the ease of being able to drill it. Being close to Sudbury, the feeling is that we could probably do this almost like a quarry and just haul the ore by truck right to Sudbury and into a mill there. So we'll have a really small footprint on the ground. So we won't have a lot of infrastructure on the ground, just probably a crushing plant. That's the ideas right now. It's it's early days. We may find some more and go with a bigger target. The 500,000 ounces of palladium equivalent is pretty straightforward. And as was said, we can drill it on strike and down dip, and then we should be able to bring it up to. I know the CEO likes to use 2 million. I like to use 1 million to 1.5 million. 1.5 million, I think, is attainable. And it depends on how we want to approach this, and keep pushing holes into it. So,
Gary, it sounds like you are coming to us from the company's core shack, and so I'm surprised that core shack even has internet connection. So if something does cut out, we'll try to get you back on as quickly as possible. But you've got a couple images you wanted to share with us and people listening. So let's start out with that slide number 1 and just kind of walk us through what we're looking at here.
Okay, so this is a simplified slide that basically shows the mineralization that's already there and that was been calculated out as 500,000 ounces of its palladium equivalent. And you can see some of the places where there's gaps, and there's a 400-meter gap between one of the zones, the Garden Zone, and the Valhalla Zone. The Valhalla Zone is the solid color on the right, and we have still lots of room left, 3,000 meters of strike length that needs to be tested in total, and down, as was said, down to 120 meters. And you can see a couple of places where there's gaps even in the drilling that's already been there. The vertical lines are basically projected vertically, and those little vertical lines are the drill holes, previous drill holes. And there's a nice gap, that 400-meter gap, that we're going to put some holes into there, and we've done a little bit of prospecting there, and there's the mineralization outcrops on surface pretty well along the whole strike length. So we've been lucky in that way too. There's a really good road that goes in there for access, and it's a trail, but I mean it was put in years ago by the Atomic Energy Board of Canada, that we're looking for places for repository of nuclear waste, and they went in and did some work in this area, looking for something solid that they could put, but they ended up putting the road right by where we want it, so it's perfect. So that gives you an idea. Right now, where we're drilling, we would be, if you look in there, we're about a third of the way down the total strike length from the two blue areas, or the two areas that are there. We're drilling a series of holes right now that are just going to be confirmatory holes of some higher grades that were intersected. When the 43101 was completed in 2017, the vendor actually drilled 3 holes to verify the 1999-2000 drill holes, and he duplicated one of them with good success. And so we put some holes around that. We're looking for something a little higher grade than we have now, so we can point to the fact that there could be some starter pit potential. So there could be some places where you get some better grades and get the things up and running. So then the next map, that one comes up, I take it.
Yep.
Kind of gives you an idea where we are in our property in the middle there. There's another company called Grid Metals, and Grid Metals actually have a bunch of showings on their property, and we've got a handshake agreement with them to share information and help each other out so that we can maximize our dollars. And on this one, if you look right below the word East Bull in the plate, you can see that the road right there goes right north-south, right up by the corner of the property. And that's a highway. That's a numbered highway. It's plowed all the time and it's sanded. It's worked out very well for us for access, for sure.
I think that's a really good point that you make there, Gary, about the road and the fact that you're so close to Sudbury, the fact that the ore could be, shipped there via truck means that you don't need to build a mill on site, which just knocks the capex cost way, way, way down. And there's
that was one of the things that
in Sudbury that can process, this ore. I mean, obviously you need to do some work on that to make sure that the mills can handle it, but most likely they can.
Yeah, it's early days on that part of it, but that's kind of the logical way to go. You have both Glencore and Vale with big mills in Sudbury, so there's capacity there for sure. And then there's power just off the edge south of this map, a big power line that goes into Sudbury. So I don't think we have a problem with infrastructure in this one at all. And obviously, there's a First Nation community just south of Massey, which is 40 kilometers south of the property down the highway. And that community actually does contract work at the mines in Sudbury. So they've already come to us and said, if we need equipment or we need people to run big equipment, they want to help us out whatever way they can. The next map is just a conceptual of just the Valhalla zone itself, and it's with the drill holes. And if you go into the very kind of center of the map where the bigger ellipsoid is there's a 12 12 meters of 2.82 grams per ton. And that one is where we're drilling around to see if we can build up something for a starter pit idea. And then we're going to step back, and then basically off some of these holes, we're just going to drill a hole of a steeper angle on some of the setups. And we're going to step back pretty well almost to the top of this page and drill holes. And since everything dips into the page to the north, so it dips at minus 45, our holes, even when they're stepped back quite a ways, are basically on a perfect angle to drill this. So we can drill a 45 and drill a structure at 45, and it works out very economic when it comes to the number of meters we need to use too. So, but this just gives an illustration of some of the grades that we've got from the previous drilling. And I think the other one is just the concept. This is now a plan of the first one that we had, and you can see where the garden zone is, and then where the East Bull deposit itself or the Valhalla zone itself is, and then we've got the gap in between that hasn't, it's got like one hole in it. So, and there's mineralization that goes right along. These dikes, the diabase dikes that are there, we're not sure how they affect things, but we know that they do blank out some spots where there's no ore there, but that doesn't mean there's not ore below it. And there's other concepts that these could be set up as feeder zones and could have had mineralization. So same with the other ones that are labeled as mafic dikes off on this end. Those mafic dikes, there's a couple of geologists that are working on the idea that those mafic dikes may be late stages of the mineralizing event, and that's where the fluids came in and then filled in the zones the way it is now. So, there's a bit of structural work for us to do, but it's pretty straightforward. This zone itself is kind of at the base of a gabbroic complex, and at the base they call it the inclusion zone. And it's kind of, if you think of concrete, and you think about the rocks in concrete, when you look at it, you see it. The rock itself, when it was injected, rolled itself up and made itself look like it's like concrete almost in some places. And then what happens is the mineralization and the fluid better come in afterwards and go around that, or they were already there and they got tumbled in it too. So in previous sections are sections up to 20 centimeters of massive sulfides, and those obviously run really good in copper, nickel, and obviously the PGEs. So, and the palladium. The nice thing is that this is a high palladium to platinum ratio, and that's palladium being at an alarmingly high rate of high cost is a good place to be.
What's a typical ratio, Gary, of the platinum to palladium?
I think here it's about 5 to 1. So there's usually 5 times more palladium.
Wow.
Lac des Iles, which is the other primary producer in Canada of platinum group metals, is about the same, or even a little higher, sometimes 7 to 1.
So I think a natural thing to ask here as we look at this map, this diagram essentially, is obviously there's been historic work here done for, I don't know, the last 20 to 30 years by various operators. Why is that gap there? Why was that never really, explored? And also, why didn't they drill at depth? Was that just a cost issue? They were just trying to save costs?
Well, a little bit of the cost issue, but also the property originally where those diabase dikes are in the middle of the Valhalla zone, that was the boundary between 2 different operators.
Oh.
So the operator on the right, which is Grid Metals, or was Grid, it used to be called Mustang Minerals. They changed to Grid Metals. They did that work, and then the company on the left end, or the west end of it, they were actually accessing the property from the other end too. So we come in from the east, they came in from the west. They didn't share their information with each other, so they just did what they could do. It was 1980, late 80s or late 90s, and early 2000s. And at the time, platinum palladium was a good place to be, but it was a little better to be in the platinum game than it was the palladium game at the time. So I think they just went ahead and did what they could with the money they could raise.
Makes sense. I think there's so many stories, like that in this sector where the property package was split with more than one operator, multiple operators, and it was all chopped up, and that's why there was no one integrated resource or program put together to explore the property more effectively. So that actually makes a lot of sense.
And it, now with the prices, the palladium, and the fact that there's some good palladium numbers in this area, you can raise some half decent amount of money that you can go and do a fairly thorough job. And and up until probably the last little while, people haven't been able to raise money. I know, we've had this project for over a year, and we had when we first picked the project up, it broke $1,500 an ounce US, and so we thought our background is we did a deal with a cobalt deal called US Cobalt, and we did the same with the cobalt there. We picked it up just when the cobalt was rising. We were able to drill off a deposit and sold it. And this one came along and it was almost the same scenario. So we just kind of jumped on it too.
And I think that's a really important point. I mean, you picked this up, the project, the price of the metal was about $1,500 or thereabouts. This morning it's $2,600. It traded as high as $2,800 overnight. I mean, this is one of the greatest bull markets I think we've ever seen. And I wrote in my morning email to subscribers, do you know anybody who owns this metal? Do you know anybody who owns it? I don't. I mean, I don't own it. So to call it a bubble just because the chart has gone from 1,500 to 2,600, I think is a little absurd. I mean, that's not even a double. Would I buy right here at 2,600? I don't know. Probably not. I'm not. So no, but I wouldn't short it either. That's for damn sure.
No, and obviously I've been following all the different news that comes out on the product, and the palladium market's in huge deficit. And part of that is that you never know what's going to come out of Russia, because they don't seem to give you any idea what they're going to put out. And there's lots of problems in South Africa right now with their electrical system and being able to produce anything in mines at all. At some points they have to close the mines down just because they have rolling blackouts. So.
And they're going deep underground there in South Africa, right? Like they're like a mile deep at some of those mines, right?
Yeah, I went to a presentation by Impala, and their first mine cost, I think it was $46 million to put the shaft in. GM paid for the shaft because that was when the catalytic converters became, GM realized that they needed a solid supply. They've got 40 something shafts on this property that they have there now. So and they've come in and bought North American Palladium north of Thunder Bay, and the reason being because they can see a 7-year window of good prices.
I think that's a really important point. I mean, so that Thunder Bay mine has had a checkered history where previous operators have gone bankrupt. The mine was losing money for many, many years in the last couple of decades. And a foreign company came in and paid $1 billion for a project that is arguably really not that great, with very high cost structure, because they just think the metal is going to be that high priced for the next 7 to 10 years. And there's one more question I want to ask you, Gary. This project has rhodium, which is a super rare metal that is actually worth $12,000 an ounce as I speak these words. Can you tell us how much rhodium you think is there?
I had this discussion with Wayne, the CEO, this morning. The ore resource that was calculated for the 43-101 had about 0.03 grams per ton. That's 0.03 grams per ton works out to about $20-something a ton at the present rate, at present price. The thing with that is it usually reports with the rest of the PGs. So until it's smelted, you don't get that out. But I mean, it's there, and it's going to be, that price isn't changing either. It's more of a quality catalytic converter product than palladium, but it's that much rarer that you don't use it as much. So,
well, gentlemen, we need to get things wrapped up here, but is there anything you wanted to finish off with? Any last questions you have, Rob, for Gary?
Just tell us a little bit about the first couple holes and how things are looking and where you're gonna put hole number 3.
And maybe show
Well-
that. Maybe show that first slide, Gary. Maybe that'd be
Okay, I'll go back to it. So right now we're drilling in this area. You can see my mouse on there.
Mm-hmm.
So we're drilling in that area on either side of these holes. And that's the spot where we had the better grades in the duplicate hole that was done in 2017. So we're going to put a hole on either side of that. And then we're going to step back and start drilling the deeper holes and basically fleshing out the bigger volume of rock.
And then when will you go into that 400 meter gap there?
Well, right now the Prospectors and Developers Association convention's coming up. So after the convention, we're contemplating going to 2 machines, 2 drills. So the one drill will be systematic and the other one will just move along and check out places like that. And so we'll get a little more or a little further away from what we know and try to get, big expansions. So
Sounds good.
So that, we're hoping, that's where we're going to be at the end of March. We'll be 2 machines running and core flying out and going to the lab. I don't mean fly as in airplane flying, but so.
Well, thanks, Gary. I really appreciate the time. This was a good rundown of the project and all the drilling catalysts that are coming down the pipeline for you. And I'll be sure to follow up with you at PDAC here in 2 weeks, and maybe we'll follow up.
Yeah, we're going to have some core there. We're going to be in a booth with the vendor, and his name is Pavi Arc is the name of his company. It's Richard Sutcliffe. So we're going to have we'll have some core there to look at anyway.
Sounds good. And Rob, always good to partner up with you on these things. And thanks again for all your questions and thorough input here.
Thanks, Trevor. Thanks, Gary.
All right. Take care,
Thanks.
everybody. Thank you.
Good meeting you guys.